Hi guys. So today we're going to talk about fair value gap and what it really means. Everyone's talking about fair value gap these days, all the smart money concept and everything. But today we'll learn deep about what fair value gap is. So first things first, what is the fair value gap? Fair. So a fair value gap is an imbalance, or you can call it liquidity void or imbalance in the market. Like whenever there is no contradicting orders going up or going down, that is where fair value gap is created. So imagine a price, imagine a price hits a liquidity sweep until the LS, and when there's a liquidity sweep, mostly what price will do is sweep out all the liquidity either to the downside or upside, and then turns the market to the other direction. So when there's a big move coming down and there's a big move going right after that like uptrend, there's a big gap created between the three candle. That is called the fair value gap. So it is a three candle pattern stick. So it is a three candlestick pattern, and then there are basically two types of fair value gap. We call it FVG for now. Bro, how do I increase the size of this? Alright, nah, that looks shit. So there are two types of fair value gap. So they are bullish fair value gap and bearish fair value gap. So first things first, what does the fair value gap helps us do? So imagine the price hits liquidity sweep and you miss out on the entry, because trading off of the liquidity sweep and break of structure is not gonna be enough for you. You need one more confluence, and fair value gap is gonna be the next confluence for you. So you can treat fair value gap. You can treat fair value gap as your retracement. So whenever the price moves up or down in a big way, there's so many gaps created. So that's the main imbalance. And the price either comes to this area again to fill out the void that's caused in the market. So imagine, where is it? No. Eh. So imagine that's one. I'm shit at this. Two, three, and four. So you know how this two, the price is pretty much, so imagine still here. So the price is all covered. There's a little bit, but it doesn't work. So with that as well. But if you look at that and that, there's a void right here. So that void is what you call a fair value gap. So that's a fair value gap. And then, like, according to the market experience, I don't know, whatever, but if the price is gonna go up, 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 if the price still goes up, up, at least come once to this direction to test out the zone and then go back up again. So this is where you enter again. You can put it on liquidity sweep, you can put it on right here and target the next area. So that basically is a fair value gap. It has to be three candlestick pattern. Next thing, so imagine a fair value gap to the upside, right? That's one. And where is that one? That's two. That's three. So imagine there's a fair value gap right here, as we already mentioned. From that to that, that's a fair value gap, right? Fucking hell. So that's a fair value gap. So you draw a fair value gap from the first candle's high to the third candle's low. That's it. From there to there, you start from here, inside here. So if you ask me, does the three candle has to be of the same color? The answer is I don't know. So imagine the market is going on a bullish direction. So most people get confused is so suppose this is green candle, this is green candle, and this is green candle. So normally it goes like this, but suppose what if this is a red candlestick? Would you still say this is a fair value gap? Absolutely. Why not? Because there's still imbalance. Like the three candlestick pattern is right here. There's imbalance, that's fair value gap. So that is the bullish fair value gap, right? And then let's look at the bearish fair value gap. So for the bearish fair value gap, suppose that's a red. Oh, that's a good one. So suppose that's a red candle one. Red candle two. Red candle three. So pretty much now you will know what a fair value gap. For the bearish, you take out the first candle low, third candle high. That's a fair value gap right there. That's how you identify a fair value gap. Easy. So likewise, imagine the price was here. And then like there was a high right here. Imagine this just goes right here. So that was a very prominent high. Imagine a price sweeps of the liquidity of high and goes down. That's the liquid. So imagine a price sweeps out liquidity and goes down. So this is a market reversal. So whenever it goes down from here, it tends to come back right once again to test out the fair value gap or fill the imbalance that's created between these two and go down again. Right? That's too much yapping. Let's wait on the real charts. So basically you can find fair value gap at any price direction. Let me cherry pick for you. Right. What's going on? Alright. Right. See, this three candle right here. That's a fair value gap. Go from the low of the first candlestick to the high of the third candlestick. And see, the price come back here, taps the fair value gap, bang, moves down. How was your entry this? Right here. But hey, no, we're not looking at any entries because this is a shitty entry. It's just cherry picking. But I'm just trying to show you how the fair value gap works. See, this is basically a news, but three candlestick pattern. See here, the third candlestick is an bullish candlestick, but still fair value gap, right? So here to here, we create the fair value gap. Price comes in the fair value gap, then easy. It's in every chart possible. So let's say on 5 minute. See, that's one fair value gap. Sorry, that doesn't get hit. That's your second fair value gap. Price tested so many times. There was a weekend off, so the price is basically shitty. But we're just looking at the fair value gap. We're not looking at any entries. We're not looking at any how to enter the market, how to enter the trade with the fair value gap, because you need a basically so many things. Okay. So let's look at the bullish fair value gap. Alright, it's a perfect example. So, bro, these ads. I don't need ads. So look at that. Fair value gap created right here. Oh my god. So fair value gap created right here. The price barely taps in the zone, moves up. So basically that's it. That's what fair value gap is. It's pretty simple. It's very simple to mark out in the market. So there's no fair value gap here. Holy moly. Let's go back to 5 minutes. You see this basically everywhere. You see here? Three candlestick pattern. That's a fair value gap. The price comes back to fair value gap, goes up. You see that? When the market's going down, one fair value gap, two fair value gap, market comes taps into the fair value gap, bang. That's it. It's very simple. But look, like I said, you cannot trade off just fair value gap because there's so many times when the fair value gap gets absolutely disrespected. Just like, all right, here's a perfect example. So you would say this is the fair value gap, right? And you would say this is the fair value gap. So according to what we learned, the price comes back here, tap in, you would basically go long in it. So you go long, you'll put stop loss maybe here with the previous low, and you look at the take profit around here, but we'll not talk about this for now. You'll get stopped out, easy. So why this happens is like you're just trading based off one confluence, and that it's never enough for your trading strategy. That is never enough. Look at the next one. There's a fair value gap created here. Price comes down. You would think the market will go up again. You'll go long. you're stopped out. Simple as that. Same with the bearish market. There's a fair value gap created here. You would think after market reach here, it go down. Does it go down though? Yes, take profit over here. Where you get stopped out. That's it. So yeah, basically that is it about the fair value gap. So what you do is mainly so fair value gap is everywhere in the market. But in this video, we just learn how to spot the fair value gap. Fair value gap. How the price reacts to fair value gap, and then when the fair value gap is respected, when the fair value gap is not respected. So to sum up, like we just said, it's a 3 candlestick pattern. It doesn't have to be of the same color. So if it's a bullish fair value gap, the third candlestick may still be red, and that's a fair value gap. So imagine it's a bearish fair value gap. The third candlestick can still be bullish, and it still can be a fair value gap. So it doesn't have to be the same color. You zone out the fair value gap by the first candlestick high to the third candlestick low in the bullish market, and opposite on the bearish market. And let's see if we have fair value gap. So you treat fair value gap as a retracement, where if you missed an entry, you move again. So imagine, so basically you're trading the trend, right? If you're trading against the trend, yeah, good luck with that. Good luck with that. So you're trading against the with the trend. So this is really frustrating. So suppose the market was going down, 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 and imagine there was a liquidity here. Liquidity gets swept, and the market's going up. So imagine you missed out on here, or you missed out on here, but you still want to ride the trend. So this pullback, which happens, will be a fair value. There's so many other components, but today we only talk about fair value gap. So you want market to come down here, and then so maybe there's a fair value gap right here in the candlestick. Maybe the fair value gap is right here. So you will want to catch another trade here. You will not want to catch trade here, here, or here. Always on the pullbacks. Always on the pullbacks. So once you catch it here, we're not going to talk about stop loss yet. We're not going to talk about take profit yet. But your stop loss, first stop loss could be right below the liquidity, or if you wanted to risk it, it could be right below fair value gap. And we're going to look at the highs. So that's the previous highs. None. Simple as that. Or here. 1.96 as a beginner, that's a very good trade. I wouldn't say very good because good is like 1:3 ratio, but hey, we're just learning. Basically, yeah, that's it. That's what a fair value gap is. Thank you guys. We'll probably see you in the next video if I make it, because I don't know, I'm just looking at how the things work. If I'm gonna upload it on YouTube, if I'm gonna upload it on TikTok, or it's just gonna be one and only video. See ya.